Well, hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature. We've now rolled over into the June contract as the March contract expired. Well, actually, it's not expired, but certainly the volume rolled over yesterday. Today is Friday, the 12th day of March. 2010, and looking at some very interesting chart setups once more as the drama just simply continues. Great market environment. We're looking at the last print of 1146.50. Looks like definitely we're going to have a lower move. We'll look at a daily chart in a second, but as you can see right here, and looking at our intraday dynamics, our proprietary indicators by which we use to gauge the market's likely direction. Actually, yesterday's late session move on Thursday seems to be a bit of an errant move, although it certainly was enjoyable to participate from, to profit from, I should say. We'll look at that in a second. Had about 5 systems profit beautifully, buying right around here and just catching the whole of the move. A couple of other key systems, unfortunately, we'll look at those as well, went long early. And got stopped out right here, but nevertheless, 5 beautiful trades from 5 systems. We'll look at that in a second, but nevertheless, it does look like it's a bit of an errant move, given that we certainly have some divergences amongst our indicators. In fact, once we had the bear trap open yesterday morning, we did see some rather extreme bearishness. We had bearish. Certainly was the indication. The market did come back to retest the underside of the trend, as is always the case. A half gap fill, beautiful short setup right there, as always. Came down, but just really wasn't about to. The bulls just simply weren't about to give up. The market did come back and chop around the trend, suggesting that it was likely to go higher, even though we had some continued bearishness amongst our indicators. We did see some switches to the bullish side. Now, once we had price above the trend, certainly above the high of the early session, this double top high, we had 50% bullish indications. Actually, I take that back, 75% bullishness. It was certainly off to the races for a close at the high of the session, and right back into this resistance zone around the 1148 level, as we can see on the market. Certainly around 1150 is the market, the key level the market's looking to trade off of, or trade from, I should say. We magnetized right there this morning, and it was simply a bull trap as a continuation move of this move. Certainly wasn't to be, and the bulls got trapped, and the bears took advantage. Again, we're looking at the bearish indications. Quadruple threat bearishness here. Save the trend. We've got a full bearish picture. Nevertheless, we do have extreme resistance right around the level of 1148 to 1150. So it certainly looks like the market's about to move lower. Now, having said that, we certainly continue to remain officially bullish on the market. This is an intraday perspective of the market right there. Look at this swing system 5.0. Beautiful long, right around 10,300 in the YM. 10,564 is the last print. One of our favorite systems. Actually, we're going to look at Day Trader 10.0. Look at that. Catches the whole of the move late in the day yesterday. The Day Trader 9.0 also buying right before the move. Catches the whole of the move. Not so fortunate was the... we'll actually minimize that. And we'll take a look at the daily chart here in a second. Actually, we're going to take a look at that now because that's the desktop we're looking at. So this is a chart of the daily market, the S&P 500 cash market, and as you can see, we are right at the former early January highs, which, as you can see right there, look at that level of resistance right there at around, we'll call it 50. 1150 even, and certainly we're right back there, so it definitely looks like the market is likely to move lower given the intraday dynamics that we've seen suggesting bearishness over the last couple of days in concert with certainly the extreme level of horizontal resistance, albeit the trend and price technicals as well as momentum and directional movement all are overwhelmingly bullish on the market. So where are we? Well, we're officially bullish. Still bullish as of 11:21. The market's now at 11:51. So a quick 30-point gain in the SPYs, the spiders, or the however you're trading these free market timing recommendations that over the last 16 months or so have garnered around 600 points. You certainly can be trading the E-mini contract as well, which would have been a gain of $1,500 per contract just over the last 7 or so days. if you're trading the ES contract. So definitely hope you're taking advantage of these trading or our official market timing biases in the market, and we certainly are going to remain bullish, but just on a short-term basis, do kind of expect a bit of a correction. How will that correction be? It remains to be seen. We do have some complacency in our indicators, as we've mentioned oftentimes. Once we get down to these key levels, right around here, you're going to see these little swoons in the market. Boom, boom. There's another one right there, and certainly suggestive of a correction. But we'll let price be the final arbiter, and we're going to go ahead and look actually at, we'll go ahead and minimize that. And there's our EVO. Now the EVO, both ES and EVO ER, both managed to buy in the open early yesterday and hold throughout the entire part of the session. Nevertheless, not quite fortunate. As fortunate was the ES Day Trader 1.0 in a nice short setup today, but got stopped out on a trailing stop. This double top, lower high. Certainly any other situation would have been a great stop out, but unfortunately got stopped out right at the low on also the Russell Day Trader 1.0. As you can see, getting stopped right at the low of 668 before the move up. So it happens, but nevertheless, we did have kind of a new portfolio. We're going to talk about the MSA in a second, but it's called an Elite 5.0, and if you're interested in trading this portfolio, you certainly can. It's an aggressive portfolio, mind you, but certainly has weathered and managed to take advantage of the recent moves that we've seen in price. In fact, most of our the more diversified portfolios we have, those have really been outperforming our more central or concentrated portfolios that, for instance, our HR portfolios that are really concentrated. When they do great, they're gangbusters, and it's a great opportunity to get involved in those portfolios as well. But weathering the storm of the choppiness, coming up against resistance, trying to make its way the market as it breaks out to new intermediate term highs, really diversification remains the key. And as you can see, with here these systems, they banked, just trading 2 lots each system, $4,000 yesterday. We've kind of taken a graphical representation of those trades that we just spotlighted, and those are the key 5 systems right there. 580 contract for the EVO ER right there. If you're interested in trading those, you certainly can. 2 lots a piece for a $15,000 aggressive account. It's just $2,000 3 months right there on the home page. In fact, this is the home page right here, and you just kind of scroll over or maximize your screen. You get the MSA right there, right over there, and you can get the 5.0 Elite right there. And what's more, if you're interested in trading a light version of the 5.0, you can just do 1 contract across all 5 systems, and I think there's a link to that here. Nevertheless, just email us, or you can go under Platinum Day Traders right there, and the light version, which is just 1 lot a piece, should actually come up on page 2. But we are certainly running out of time. Definitely wanted to talk also. There they are, page 2 of the Platinum Day Traders. There's the light version right there, $1,500 at 3 months. You could trade that portfolio as well, take advantage of those. And actually, we can go ahead and click on this right here, the Elite 5.0, right where we just were, and you can get the bevy of statistics. Look at this, $217,000 in profits over 4 years. 1,500% return. Of course, it's a very aggressive portfolio. Average drawdown of just $3,600. Total commission of $18,900 included. Total slippage of $28,000 included. Minimum capital $15,000. We'd recommend you trade $30,000, given it is a very aggressive portfolio. But nevertheless, you can get started with just $15,000, and there you can scroll down and see all. Look at this right here. Beautiful new equity highs. Green means new equity highs. There's the monthly profit. Look at the monthly profit right here on this combination of these 5 systems. 4,000, 7,000 in February, 3,000 in January, lost in December, thousands, 7,000. Just a beautiful opportunity. We're going to talk more about the Mesa, the MSA portfolio. You can go right there. Beautiful portfolio next week, and hope you enjoy the video. And this is a great portfolio, by the way. You can get started with as little as $5,000, and look at this. Amazing returns in the millions. So if you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com, and we'll see you next time.